Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 9th, 2013. Lots to talk about, so let's get started. Alright, this is the chart of the SPY, which is the ETF that tracks the S&P 500. Okay, so let's just do a quick analysis of what happened last week. Alright, so it's pretty obvious if I just zoom in over here. Let me just do a little bit of more of a controlled zoom if I can. I guess not, but anyways. Alright, so we come down from the top here as we talked about, and then we also talked about this 165.80 level having some significance, and this is what I'm saying is from the previous video. And then we come straight down into the 50 moving average and this bottom trend line. And this, I don't think this bottom trend line was here in the previous video, but it is today, so let me just delete that. It goes right into the 50 moving average, finds pretty good support, gaps up on Friday, and goes right into the 20 moving average. So what does that mean? This means, well, all of you know that have been following my video, I'm neither a bull or a bear. I'm a short-term trader, so if it goes up, I'm long. If it goes short, if it goes down, I'm short. It's just, that's pretty much how I play it. I don't buy and hold like most institutions and funds, and I wouldn't say institutions, but like 401k funds and stuff like that. They buy and hold. I'm not that kind of person. I sell the dips and go long the bounces. And right now what I think is happening is this: there is a potential. Here's another calculation. Because of this run down here, I was able to get enough valid data. So this is a valid, keep in mind that this is a valid price created on Friday, which is 171.81, which would be the next resistance point. Okay, scratch the previous resistance points. This will be the next resistance point, which is the 171.81. And when I say this is the resistance point, I'm not saying that it's going to get to 171.81. What I'm saying is if it does get to the 171.81 level, then that's when I would be initiating a short. I was prepared to initiate a long trade at this 158.37 level. It did not, unfortunately, get there, but it is what it is. I could have definitely traded the 50 moving average. It did create this reversal, okay? But unfortunately, like most of you watching these videos, you all have, just like myself, a full-time job, and I actually missed this trade. So I'm not going to tell you, oh yeah, I got into this trade to make myself sound better, so I get more followers. It's not the case. The case is I missed this trade, unfortunately. I wish I caught it, but I didn't. This was a nice reversal. It did it not on that much volume, but it was enough for me to consider a definite reversal. After a sharp down move, it would have made sense that we would have had a bounce. Now, the question you all probably have is, what's going to happen next? And with technical analysis, everybody wants to think that it's able to predict the future. Unfortunately, it's not the case, but it's pretty close. All I am doing is putting the odds in my favor. Will the odds work? Not necessarily. Sometimes it doesn't. Sometimes I can get a 90% ratio in odds, and I still, within that 10%, am wrong in direction. So, for most traders, even professionals, that's why you have your stops, and that's why you protect yourself, and it's because of all the manipulation in the market. It's expected. Anyways, so what do I think? Well, here's the thing. We're right into the 20 moving average. We're unable to close above the 20 moving average. That's one of the key things that I'm noticing now, is that although we had a nice move up, we went right into the 20 moving average and we were unable to close above it before the market closed on Friday. Does that mean we cannot go higher? No, it doesn't. All it means is that it's going to show some support. We also have this trend line over here going all the way up, that coincides with this 165.80, which means that we would also have to pierce through the 165.80 level. All of around this area here will be resistance. Okay, if we can get through these levels here, then obviously the market is still showing a lot of strength, which is great, and we'll go right into this upper trend line over here, which we had previous resistance. If we get past this upper trend line here, then the 171.81 is where I would probably initiate a short. So where am I initiating shorts? Well, basically, I would probably initiate a short here at the 165.80 level. We close above, I stop out. I initiate another short over here. We close above, I stop out, and one more time at the 171.81 level. And of course, if we close above, then I stop out. Now, this is counter trend trading. It's not a very good idea to do, but in my opinion, we've already made this move up. This move has already been made, so if I enter the market now long, then I would be chasing, and I do not believe in chasing. I've ran into so many traps, and my consequences was obviously losing money when I chased the market. Had I gotten down here, it would have been a different story. Now, let's just say that we get in to this level here. I took a short trade. I would probably consider taking a long trade at either the 158.37 or the 165.80. It depends on how much risk I want to put on the table. And the reason is this: the market is still in an uptrend. Nothing has changed. We have a low, and what it's created was another lower low. All we need is one more up day. So say we go into this 165.80 level. Remember, my methodology states that you need at least 3 days in a certain direction for it to be considered a pivot. A pivot is what dictates a higher high and a higher low. So obviously this has been more than 3 days down, and then you create a pivot, right? Now we need 3 days up to be able to say if we do find resistance at the 165.80 level, then this would be considered up here another pivot. So right now we have a pivot low here, right? We have a pivot low here because we've come down longer than 3 days. This makes this a higher low, which means the uptrend is still intact, which means if we get to the 171.81 level, that would definitely not surprise me, right? The 171 obviously the 171.81 obviously creating a higher high. Now how long can this trend go higher? Who knows? I mean, this guy has been strong. The SPY has been strong. The market has been very strong. We keep printing money. Uncle Ben keeps coming out saying that he's going to keep printing money. A lot of people out there are still short the market. I don't know if I'm the only one out there who's more of a neutral trader. Would I be looking to go long versus going short? I still have my favor, I guess you could say, in looking for short trades. And the reason is obviously the market is going straight up like a rocket, just like this. I mean, we could go all the way to the next level, which is the 176.77 level. That's definitely a possibility, and we could even go even higher than that. I don't have a level, but you know, we could even reach 200 one day. That's definitely a possibility, but we have to just play it day by day and see what happens. And right now, in any extended situation like this, it just wouldn't be wise to look for a longer term long trade, because it's just been a skyrocket high. A lot of people think this is a bubble. I think that there's a possibility that this would need to start correcting. This is not a correction here. It's, I guess you could call it a mini correction. I call it more of a pullback than a correction. So if in fact we get one more day higher, which is on Monday, and it wouldn't surprise me because Monday is a lower volume day, then that would simply mean that we would have closed above the 20 moving average. We could definitely close above the 165.80. This 165.80, by the way, has been used more than once already, so it may not hold as well. And then it goes right into this upper trend line here. That would not surprise me. It would a little bit of a pullback here. If it pulls back here into the 165.80, then I'll definitely consider taking a long trade. And if we close below the 165.80, then I'll stop out of my long trade, and I wait for it to reach this bottom trend line here before I initiate it, another long trade. And you know, I just go back and forth like so. So basically, to make a long story short, the market definitely can do multiple things next week, but I'm just showing what the different options are. You guys can obviously make the determination on your own. That's how it's always been. Now here's the hourly chart. Let's take a closer look at the shorter term to see what could happen. And what it looks like is on Monday, we could definitely see some upside, at least in the beginning of the day. So we come down, and we can make this make a case of this upper trend line here. We break through this upper trend line, and then we pull back to retest resistance. Anytime you break out of resistance, you come down, you retest the previous resistance, which is now support, and then now we bounce higher. Now let's look at this in a different way. We come up, we break through these two moving averages, which is the 50 and the 200. We come back to retest the 50 and the 200, and what happens? The 50 and the 200 moving averages come close together. Whenever they come close together like this, that means it's going to show some support, which is not surprising to me that this would actually happen, and then you get a bounce. So that's scenario number 2, which is showing short-term bullishness. Then the third one is we come up and we just, without moving averages or anything, we just consolidate, and then now we have a possibility of moving higher once again, heading for a retest of the 165.80 level, which, by the way, as I said, may not hold as well as it did previously because it's already been used. Any level, it doesn't matter if it's a moving average, it doesn't matter if it's a calculated level, it doesn't matter if it's doesn't matter any level. Once it's used for support or resistance, then it doesn't hold as strong. Okay, so that's just my opinion. I never trust it. I only trust the level the first time. So this is a short-term analysis, so it does look like we will be bullish, at least in the beginning. Okay, and we could continue higher, but we'll just have to see and take it day by day. And I'll probably post screenshots on Facebook midweek next week just to track the market to make sure that it will be continuing higher or looking like that it might be reversing lower. Now in the hourly chart, we have a high, a lower high, lower high, lower high, and so on and so forth, creating this downtrend here. And then of course we have lower lows and so on and so forth. But what this is just a kind of like a wedge or a flag pattern, a descending flag pattern. And what we've done was we've broke out of this flag pattern here. Any breakout, as you all know, I'm a volume analysis player. We did that breakout on high volume, which indicated that this rally, I guess you could call, could continue higher. And that's exactly what it did. So this is why volume is so important anytime you break out of any situation. But just like this flag pattern on the daily chart, we have something very similar, except it's much more extended. Okay, and we also talked about in the previous video, anytime you break out of a flag pattern in the wrong direction, so this is a ascending flag pattern, okay, and then we broke out to the top, it's going to be short-lived, just as expected. The 165.80 level was the last level that I could have calculated, so it pretty much determined that it was going to turn over shortly as discussed, and we went right back into the flag pattern, retested support, and now it looks like we're gonna go retest the 165.80 level again. Now we'll see if we get a pullback. Now here's the thing, this is what you need to watch out for. If you get a pullback at the 165.80 level after Monday, okay, just keep that in mind. After Monday, let me delete all the lines over here. So after Monday, say Monday we get kind of a neutral day, kind of a reversal candle, something a little higher volume, something of that sort. I would much rather have it in 2 more days. So let's just say Monday we create, delete this line here. Let's say Monday we close over here, for example. We create some kind of candle like this, for example, on Monday, and that would have closed above the 20 moving average. And then let's just say on Tuesday we create some sort of reversal candle. Okay, so this would be Monday's volume. Obviously it'll probably be a lower volume candle, and then on Tuesday somehow we get high volume, and then we get a doji candle, or better yet, we get a tail that tags this and a body that comes down here creating a shooting star. As long as we don't close above the 165.80 level, this would be considered a lower or a higher low or lower high, however you want to call it. And that would mean that this could be the start of a trend change. We come back down. If we break through this bottom trend line here, this trend line, making another lower low, for example, then the trend would have changed, and I think the market will turn over very shortly. Okay, that's just something to consider. It doesn't mean it's going to happen. It's just something that you want to keep your eye on. Now, if we continue higher and we break through this upper trend line here, then my feeling, again, it's not technical analysis telling me this, but my feeling is the 171.81 level could potentially get tagged before we get another pullback, and whether or not that pullback is going to be significant enough to be called a correction will remain to be seen. So those two scenarios, just keep your eye on that. Again, I'm never going to be bull or bear. I just trade the bounces and the pullbacks. It's as simple as that. Alright, moving on. Alright, we haven't done an analysis on the UUP in a while. Okay, it's been quite a long time. So a couple of support and resistance points that we want to look out for. Alright, first of all, let's just do the standard analysis. What we can do is actually create a trend line from here to here, like so. And what we've basically done was we've broken down from this trend line on very nice volume. Okay, we haven't confirmed it though, because we haven't closed below that. What we've done instead was we found support right at the 200 moving average. The question is, will the 200 moving average hold? Again, the 200 moving average was already used here. Okay, and again, like any level, doesn't matter what it is, once it's used, it's not as reliable. Okay, alright, so it depends if we find support here. If we do find support here, the first resistance level will be the 22.28, and the second resistance level, and these are major resistance levels, is the 22.69. I say major because we're going to have resistance here at this gap. We're going to find resistance at these two moving averages here. So to get to the 22.69 is not going to be an easy task, but if it does, then we should see some resistance there. Okay, we have what we have on the dollar, which is a higher high. We've had higher lows, except now we've broken down and we've created, doesn't matter how you look at it, another lower low. Even if you calculate your lower lows on the body versus the tail, it's still going to be a lower low. So it could potentially still mean that the dollar is going to start heading lower. Now keep in mind that the dollar hasn't been much of an effect on the regular markets as much as it used to, but it's just something to keep an eye on, because when they do sync up, then it's going to be a very good indicator of what the markets could potentially do in the future. So it's just something to keep your eye on, that there's a potential, because the markets are normally inverted to the inverse to the dollar, that we could see some more bullishness in the short term, at least in the regular markets themselves. Alright, this analysis is for Favco. The request was to do a quick analysis on the SLV. No problem. Let's take a quick look here. Unfortunately, the SLV, the reason why I normally always traded the SLV and the GLD, to be honest, but they haven't created any significant, very good pattern. In fact, the best pattern that I've gotten off the SLV was this pattern over here with these three calculated levels. You can see we had this triangle created. We came down, created this as the potential down move, and you guys can definitely rewind the video for you newcomers, but for you old timers, you guys remember this analysis. We came down, we had an intraday bounce off of this 3011 level, and then we had a nice bounce back into the 3011 level from the 2875, came down, found resistance again on the 2875, went back, and so on and so forth, and then until finally we come right into the 2773. So had you shorted it here when you were supposed to, it would have been, it wouldn't have been short, but you would have eventually gotten the 2773 level. We consolidate because we talked about silver building a consolidation pattern. We break down from the 2773 level. I would have definitely taken a short at a retest of the 2773 level, but instead we retested the 20 moving average and we just start heading down. We come back in to consolidate one more time and we come down. This to me looks like another potential consolidation pattern, and then we could come down again. So how much lower do I think that we could go? Let's zoom out all the way over here, and if you look closely, let me just reload the drawings here so everything I just drew gets disappeared. This little pivot here would have been an area that I would have potentially gone long. But this huge gap down here, I guess if you went long in this area, you would have still made some money. But it showed a lot of weakness. I mean, it was just basically a SLV crash. Okay, so your next potential support would have been right here at the gap. So you got gap fill and you got gap fill, gap window, and gap fill. Now here's the thing about the gap window and gap fill. Even if I do gap window and gap fill here, it's still, the pattern wasn't, it's a very volatile ETF, so that didn't matter. The next major support area I would think would be around here. Yes, I know it's a long shot, and I honestly don't think that it could get down to that area as of now, but I think that's going to be a pretty significant area. If it gets there, I'll definitely consider going long. Now again, when I say gets there, it would have to go straight into it. I mean, it's not that much further away, okay? And if it is able to get into this area here, which is about the $19, maybe I would wait for a $19 flat. If it ever gets to $19 even, I may actually take a long trade here if we go straight down. If we don't go straight down and we come down and we kind of consolidate a little bit, then I stay away from it. I won't touch it. If it comes down again, it could break through this resistance support point here, and then the next one would obviously be around this area right here where you have all this consolidation, and then obviously your next major one would be around this area here. But again, I don't think it gets all the way down here. Okay, but you know, again, whenever I say I don't think, it's not a technical analysis. Technical analysis is telling me I would wait to the $19 flat level, or potentially a little bit before that, and see what happens. It could definitely be already finding support. Okay, that's not a problem. That's not a how should I say, a wrong analysis. And the reason why is we created this nice long candle here. Okay, and just keep this in mind. As long as you stay within this long candle here, that will give you a pretty good indication of what SLV may start doing. Okay, because SLV has been pretty weak for a long time, so I wouldn't be surprised if it does find support soon. All right, so here's the deal. If you close, we can use this candle as kind of a gauge. If you close above this candle here, I think SLV has a good chance of retesting this 50 moving average if the 50 moving average doesn't get there before it breaks through, or obviously getting into this gap fill before finding another potential resistance point for a small pullback. If you close below the low of this candle here, which is, it's close but it's not, so the low of this candle is $20.81, and the low of the close of this candle is $20.86. So it's only 5 cents before being it's only a 5 cents difference. Okay, so if you close below here, so say on Monday we close down here, and then another day on Tuesday we close again down there, then the $19 flat is where my target would be before going long. And you know, I might do a 1925 or 1915 just to be sure I get into the trade. But again, it really depends on how we get there. Now if we gap all the way down into it, okay, just be careful, because a long gap down, something like this, that's showing a lot of weakness. So I would want to stay away from that. Okay, and again, we need 3 candles. This is 1, 2 candles from here. So this is the pivot, and then we got 1, 2. Not enough to make a pivot for me, so I wouldn't have taken the trade. For a bounce, would not have been expected. If we get 1, so we get 1, 2, 3 candles here, then I would expect a bounce at that level. Okay, so that's my opinion on the SLV. I apologize for not being able to get a calculated level, but it's simply because the patterns have just been not there. I mean, you got a down move, consolidation, down move, a flag, down move, consolidation again. We have a shorter down move, consolidation. As you can see, the down moves aren't as significant as previous down moves, but if it was me, I would wait for the $19 range. That has caused me to miss a lot of trades in the past, but you guys all know how I trade. I trade very cautiously, and it keeps me out of trouble. But it doesn't mean that it wouldn't be the right trade if you were to go long now. So that's really up to you. Anyways, that should be it for today. Thank you very much for watching this video. Thank you again very much for hitting that like button. I know anyways, God bless to you all and good luck to your trading. I will try to keep up with my Facebook updates. I'll do the best I can, especially this week, because it's more of a what may happen, and I think Monday and Tuesday will determine what will happen for the rest of the next week and maybe the following weeks to come. Let me just check here real quick. Okay, and that's it. Thank you very much, and I hope